Inflation has edged up in the first month of 2025. Annual consumer price inflation was 3.2% in January, up from 3% in December. The main contributing factors are increases related to housing and utilities, food and non-alcoholic beverages, and restaurants and accommodation services. Now, economists do expected this increase as fuel prices rises and global trade tariff uncertainty hasten price increases, and this could also influence future interest rate decisions by the South African Reserve Bank. Now, for more on this and what we can expect further this year, we are joined by Ricardo Smith, Chief Investment Officer at Absa Investments. Ricardo, thank you so much for your time this morning. Now, the increase in inflation came as no surprise. Still at the bottom end of the South African Reserve Bank's target band of between 3% and 6%. What can we expect in 2025 amid global uncertainty? What are some of the upside risks?
Morning, and thanks for having me. In terms of the year ahead, we do expect inflation to continue ticking up. Absa Research expects SA inflation to average around 4% for the year, so still below the MPC's midpoint target and range bound. And then further out, expecting it to be just above that 4.5, so 4.6% next year. So expecting inflation to be contained. We do think that the deflationary effects of fuel prices will start to ease away as we pass these base effects. We do expect some normalization as well in food prices.
Now, if we look at inflation, like you said, around 4%, 4.5% mark, let's say, could we expect any update from the SARB up on lowering their target band, more in line with global economies?
Yeah, so it is a bit tougher from a South African perspective to have lower targets. Historically, we have seen inflation actually average around 5% odd. But having said that, what the Reserve Bank governor has spoken about as a target closer to that 3% odd is still within the 3 to 6% band target. I suppose perhaps a conversation around how wide the target is, because in the past,